Good afternoon. This is your summer 2021 market commentary. With the summer heating up and restrictions removed, many people are wondering what to expect with respect to the economy, markets, and of course, their personal accounts. The first half of the year saw the price of oil continue to go up, which made the Canadian stock market rise along with it. The US market is at all-time highs, the international market is also in record territory, and the tech-heavy NASDAQ recovered some of the losses it experienced at the start of the year to rise to a record high as well. Oil and the Canadian dollar are top of mind for Canadian investors right now, and both are on steep upswings. We still see some further strengthening of the energy sector as earnings will be much higher and spending will be much lower than in the past few years. What will they do with all the profits this time? Time will tell. Hopefully they hire some people back. What this means for your account is that the Canadian portion of your funds is finally adding to the overall performance for Canada moving forward is actually quite favorable. Alberta real estate has become very hot, finally joining Toronto and Vancouver hot markets. With low interest rates and people adjusting to the new normal, house prices rose sharply with heavy demand. This seemed to surprise everybody. As long as interest rates remain low, housing demand should continue, however unlikely at the pace of the last 6 months. But again, time will tell. No one really knows how much the lack of supply and strong demand will continue. Bitcoin and other cryptocurrencies are also a hot topic. Very few people understand this asset class, if it even is an asset class, so tread lightly if you're tempted to play in this space. The prices of these coins change direction very quickly and should be considered a high-risk investment at this point in time. Getting back to what we see moving forward. As the world economies continue to open up, we will either see the expected earnings of companies fall in line with expectations, exceed expectations, or disappoint. This is what will ultimately drive the short-term performance of the investments. If companies meet or disappoint, you will see some short-term weakness, likely followed by increased optimism for longer-term performance. In other words, a sell-off, followed by a quick recovery. If companies exceed expectations, you will likely see more positive short-term growth, thus staving off the expected volatility or inevitable correction that many are predicting. Try to avoid the financial noise that you're hearing. No one knows what is around the corner when it comes to stock markets. If and when the correction comes, it will be a buying opportunity, not something to fear. Outside of any black swan events, long-term, we still see the potential of strong markets worldwide over the next few years. The incredible amount of stimulus or money being injected into the economies of the world from governments has to find somewhere to go. It is either going to be spent or saved, which is normally a good thing for stock markets. This money will have to be paid back at some point, which is a whole other problem that will eventually come around to bite us. But for now, we're good. Staying invested and being diversified over asset classes, as well as rebalancing to keep our risk tolerance in check, has shown to be the best way to be a successful long-term investor. And I think you've probably heard me say that before. Have a great rest of your summer, and we'll talk to you soon.